What's going on, everybody? Welcome to Own the Chaos. My name is Brad. Fat Man Zoom will be around in just a second, but we wanted to talk to you today about this rotation that we are seeing. And we've got 5 stocks that we think are worth buying up and still have plenty of upside when it comes to the recovery plays in general. Leading up to this point, we've talked about how COVID plays have gotten us here. We've made tons of money on some of the COVID plays, and we've talked about Zoom and DocuSign, Adobe, all those ones that helped along with people working from home. And now we're starting to experience a reopening. So what does that mean? Well, some of that money that people have made in those stocks is being rotated into some recovery type plays. Now, these are plays that have obviously already made some moves, and you're going to find out in a sec which ones they are, but they still have tons of upside, and I'll explain that in the charts. Now, before we get into the 5 stocks real quick, I just wanted to give a special shout out for Sagamore Spirit for sponsoring this video. Thanks so much for that. Fat Man Zoom, what is our first stock for the day?
Okay, for the companies that you're going to see on this list, there'll be a common thread you'll see throughout. A lot of these companies are going to have benefited off of the COVID, even thrived on the COVID, but they also benefit when we reopen. And that couldn't be truer for the number one stock, which is Costco. We love Costco. I know it's downtrending. It's been downtrending for the past 3 months, but we think it's leveling out here. We think there's a great opportunity with Costco. This is one of the great companies that we believe belongs in your long-term portfolio. However, it should do well short-term, especially as we reopen. They've seen great growth thus far, having 18% growth in their retail sales year over year. But that e-commerce has really led the way. That e-commerce has grown 100% January year over year. And we think that once you add in the reopening, you're going to see a continued boom. Costco, they have a ton of cash on hand. Fundamentally, they're a solid company. And when you look at the technicals, I think you're going to find that this has a lot of room up. What do you say, Brad?
You know, in our opinion, Costco has been a perfect play on both sides of this coin, meaning a COVID type related play and a recovery play. People are going to constantly still need to go to department stores to get the things that they need. Costco has come down, and I think it's come down to a reasonable level where I think is a good solid buy. If we look at the chart here, it is coming back down to around 340, as you can see here represented by the support line that I drew here. And it has been downtrending. Today is one of those days where the market overall has kind of taken a bit of a dump. And I think this is probably a really good opportunity to get this in before it pops back up over 350. I think 350 is going to be a really solid resistance for it, but if we break up over that, it should yield or should provide a nice little momentum play here to where I think we could continue above that 350 mark. In my opinion, Costco, I think, is a $400 stock. They have not given us any indication that their growth is going to be slowing down anytime soon, given their recent earnings plays. I like this one a lot. Don't forget, Costco has awesome special dividends as well. $10 a share was the last one. So make sure you guys got yourself some Costco if you like this play, and stick around for that special dividend because they are monstrous.
So the number 2 stock on the list has been an absolute monster, and that stock is Disney. Disney has crushed it, and it's all about Disney Plus. Now, before I get into the other catalyst, let's talk about Disney Plus. Disney Plus launched in November of 2019. They had a goal to hit 60 to 90 million subscribers in 5 years. Well, they did it in 12 months. They hit 95 million subscribers as of their last quarter's earnings, and that's huge. And instead of 90 million by 2024, they're now readjusting their goal, and it's going to be 230 to 260 million. And that might even be low. So from that perspective, we're extremely bullish on Disney. And when you factor in that the parks haven't even reopened and all those revenue streams that come from our reopening will be added to this, to us, it's like gasoline on a flame. So we're excited about this stock probably more than most, especially because it's already moving up. And I know the question that you're going to want to answer is, how much further can it move up? Because it's already at highs. Well, I'm going to let Brad take care of that one.
All right, so you guys know that I'm a huge fan of Disney stock. Disney, the company in general, their business model is amazing. They've done all of the right things in this pandemic to navigate through a super troubling time. And this isn't the first one that Disney has been through. They've been around a long time. They know how to handle these types of situations. And this time wasn't any different. The big difference here was, as Fat Man Zoom mentioned, was Disney Plus. Now that the parks are going to be opening back up, I would not be afraid here of Disney's all-time highs. Just last week, they reported earnings, and they were astounding. A lot of upside here, especially when they start to open back up. If by some chance you get an opportunity to get Disney below 190, I think that is a really great opportunity for you. I like it here at 185. That's a really nice support. And then if it pops back up and starts to break over these all-time highs, I think $200 is more than in sight here. I, in my opinion, would try to scoop up as many shares as I possibly could if I felt really bullish about Disney, which I do, under $200 a share, because once it breaks over 200, I think that we see a really, really strong move from Disney leading into a reopening. It's going to be fantastic.
The number 3 stock we have is MGM, and we've loved MGM through this whole COVID trial. We've talked to you about BetMGM, how we feel really confident about the entire online gaming sector, and with MGM potentially adding 10 more states to their portfolio by the end of the year, that part of their business looks really good. What hasn't looked good is their brick and mortar. And now that we're going to be reopening, we expect people to be flooding back into MGM. And one of the big pieces that we've mentioned time and time again is Macau. And Macau is a huge piece of the business that MGM does. And we think that once travel starts going back, you're going to see those people return to the casinos, and when they can increase their capacity, it's just going to continue to build the cash pile that MGM has always been known for. So we're excited about this stock. It's now above its pre-COVID levels, but let's see how much further it can go. Brad, what say you?
What do I say about MGM other than I told you so? I love MGM, and the chart here is a bit tricky to navigate, if I'm honest. We're looking at this chart right now at 39.49 highs, which actually just happened as of this recording. Looking at this for potential pullbacks is going to be key here, even though we still remain bullish on this. I would not be afraid of all-time highs, if I'm honest, for reasons that Fat Man Zoom explained. So in my opinion, I think that it makes a lot of sense to just grab a starting position no matter where it's at because of the bullish nature that we have on MGM, and then looking for dips to grab. So grabbing a starter even at $39 a share isn't really all that crazy in my opinion. I think grabbing it down here at the $35 mark, if it comes back down and retests this, makes all of the sense in the world. And then again, if by some chance we see a significant pullback around $32, that's probably where I could see this coming down to the lowest, at least for the foreseeable future. I would be surprised if we saw MGM below $30 moving forward for the rest of this year. So if you get opportunities down below $40, I think that you're going to be set for MGM. It's going to be nice to see how this moves throughout the rest of the year.
All right, so for our number 4 stock, this is our favorite airline, and that is Southwest. We think it's time to get into the airlines if you haven't already done it. And I know the question is going to be asked, which airlines makes the most sense? It's always been Southwest for us. And I know that there are other stocks that are further down, but for good reason, Southwest has bounced back. Southwest is the best in breed, and it isn't even close. We love this company. We love how they manage their business. Brad's talked multiple times about they have the best break-even load factor. Their path to profitability is much clearer than any of the other companies. We love Southwest. We think that now that travel is starting to return, we're going to still see a little bit of a lag in international travel, but the domestic travel should see the surge at the very beginning and really maintain throughout. Southwest is really the one for us. Brad, what do the charts look like?
It's no secret that we love Southwest, and I love the chart even more. Why? Yes, it's made some really strong moves over the last year, but if I pull out this weekly chart, so each candle represents 1 week if you're not familiar with how to read these. And if I'm looking at this, we were approaching a really strong resistance here at $59.15. We'll just call it $59 just to make it easy. Looking at $59, you can see how many times this retested this high week after week, looking back before the pandemic really kind of hit. This could be a really challenging time for Southwest to kind of retest these resistances. If it does hit this and break this, I think we have a really strong move. There really isn't much stopping it all the way up to $64 a share. I like this setup, and you could venture to say that this could kind of possibly resemble what would look like a cup and handle on a weekly chart. But nevertheless, that resistance is really where I'm watching. Where is a good opportunity to buy? If by some chance this just does get rejected here at $59 a share and falls back down to $53, $54, I think that's going to be a really good solid buy. But in my opinion, I would like to have some before it gets to that $59 mark, because if it breaks above that, you might not get another opportunity to buy yourself some cheap Southwest shares.
And number 5, we have a stock that deviates a little bit. So the first 4, if you follow On the Chaos, shouldn't surprise you at all. We've talked about this. These are good stocks. The 5th stock is a bit more speculative, and it is Royal Caribbean. Royal Caribbean and the cruise liners, we think now is the time we should start building our position in there. It's a little bit more speculative, but we always talk about the market is forward-looking vessel, and so we don't want to wait until cruise liners are back for us to get in. We want to be in when they announce that. So we're going to establish a starter in there, and we're going to scale in because there's still going to be some choppiness, we think, pun intended. But Royal Caribbean is our favorite stock in class. We think that it has huge upside. It has a nice trend, as you'll see with the technicals, but with the vaccinations and on top of that, the rapid testing, you better believe that these cruise liners are doing all they can to get their passengers on board as soon as possible. So this is our 5th stock. This probably has the highest upside, but how high can it go? Brad, let's take a look.
So before I get into this chart on Royal Caribbean, I actually want to invite you over to join the Chaos crew. Today, it is also, again, helped by our partners over at Sagamore Spirits, and I wanted to just invite you over to check out the Chaos Crew to get our daily watch list. If you click join next to subscribe, you get a watch list from us, 5 stocks before the market opens, to give you a little bit of a snapshot of what we're seeing and what we think could be moving. That watch list absolutely crushes it, and you can just ask any of our Chaos Crew members. They can attest to that. But not only that, but you get access to our portfolio, our Discord groups, and everything else. So if you guys want to be a part of that, make sure you're hitting that join next to subscribe, or the links in the description as well. We'd love to have you as a part of the crew. Speaking of the crew and the captain of the ships, Royal Caribbean's chart actually looks like it has tons of upside here. When you look at this weekly chart again, I'm pulling these out because I want us to compare how these charts look pre-pandemic. And Royal Caribbean still has plenty of upside. I know a lot of people want to go towards Carnival Cruise Line or even Norwegian, and I'm not really necessarily mad at that or would blame you for looking at those. They are cheaper stocks, but the reason that they're cheaper is because they are in much worse shape than Royal Caribbean. You're looking at this here. I think that this crucial resistance at $99 a share is going to be really tough for them to get up over. But if we can do that, if Royal Caribbean can make that move up above $100 a share, it should spell a really nice move to the upside. And then we still have tons of room to go all the way up to $135 a share. That is massive upside here, close to 50%. And I think that Royal Caribbean is poised to do this. This is why we're bringing this up and why this is worth getting into, even though it's moved up considerably already. So where does it leave you to make potential purchases? Well, if we see a pullback down to around $86 a share, I like that as a new support, as it was a previous resistance. And then if you cannot get it down there at $85 or $86 a share, I think that if by some chance you can get it under 90, then you're going to be in good shape either way. So I like this as a buy in this range, and I think that there is tons of upside with Royal Caribbean just by looking at the chart. So let us know what you think about the top 5 stocks that we have in our rotation play or recovery play, whatever you want to call it. And another shout out to Sagamore for partnering up on this video. We couldn't have done this without you. And what I really couldn't do without is this Calvados, because Tesla has done me dirty. So don't forget to like and subscribe. Here's to you.